Seems like every day, every year, every decade, that the energy sector, especially upstream oil and gas, is undergoing a transformation that deserves some attention. Mark Roach here with FutureWise Energy, bringing you the straight analysis, especially on Secretary Chris Wright's recent announcement and what it means for American energy dominance in a challenging price environment. Let's cut straight to it. U.S. LNG is on track to become America's largest export product. Not cars, not tech, not agriculture, liquefied natural gas. Some of us don't even know what it is. This isn't speculation. This comes directly from the Energy Secretary Chris Wright's briefing at the recent cabinet meeting, where he outlined the first 100 days of the administration's energy initiatives. While mainstream outlets chase political drama, they're missing the fundamental shift happening in global energy markets. The U.S. is revolutionizing world energy flows, and it's happening faster than predicted. Secretary Wright just returned from Poland with significant news that deserves more attention. The U.S. signed a deal to build a nuclear reactor in northeastern Poland, the first of its design in Europe. This isn't just about one reactor, it's the opening move in America's energy diplomacy strategy. Poland's decision signals what many European nations are thinking. They want independence from Russian energy leverage, and they're looking to the U.S. as their partner. I've seen this myself for years, and they've been unable to pull it off. Maybe they will now. The implications extend far beyond one deal. We're not just selling energy, we're reshaping geopolitical alliances through energy partnerships. Eastern European nations are watching closely, and many are preparing to follow Poland's lead. Secretary Wright confirmed what industry leaders have been noting for months. LNG has already become America's second largest export, and it's positioned to claim the top spot. Consider this turnaround. A country that was desperately building import terminals just 15 years ago is now the world's premier gas exporter. The transformation is remarkable by any standard. The numbers tell the story. U.S. LNG exports are averaging over 15 BCF a day in 2025 so far, with new facilities like Plaquemines LNG Phase 1 pushing those numbers even higher. Europe is taking record volumes, well above 2024 averages, despite China's retaliatory tariffs. This export boom isn't just about corporate profits. It's fundamentally rebalancing our trade deficit. Every tanker leaving our shores represents American jobs, American technology, American influence extending across the globe. But here's what matters right now: surviving in a low oil price environment. With oil prices at multi-year lows, producers are facing serious challenges. Secretary Wright noted that the administration's pro-energy stance has helped drive prices down by signaling to markets that supply growth won't face artificial constraints. This market psychology is a double-edged sword. Lower prices benefit consumers, but squeeze producers. The key to survival is operational efficiency and strategic capital allocation. Companies that can maintain production while controlling cost will emerge stronger when prices eventually recover. Maintaining our production infrastructure isn't just about corporate survival, it's a national security imperative. Energy independence gives America strategic flexibility that was unimaginable a generation ago. Letting that infrastructure deteriorate during a price downturn would be short-sighted and dangerous. Now, the recent U.S.-Ukraine minerals and natural resource deal finalized yesterday, April 30, 2025, offers another dimension to this energy strategy. While it grants U.S. companies access to Ukrainian oil and gas resources, the impact on U.S. upstream activities appears limited right now. The deal establishes the United States-Ukraine Reconstruction Investment Fund, with the Ukraine contributing 50% of revenues from new state-owned resource projects. However, several factors may limit significant U.S. investment. However, several factors may limit significant U.S. investment. Outdated geologic data, war-related infrastructure damage, and ongoing security risk with no U.S. security guarantees in the deal. Development timelines are long, averaging 18 years, with costs ranging from $500 million to $1 billion. And benefits may not materialize for 2 decades. This makes the Ukrainian opportunity interesting, but not an immediate game changer for U.S. producers struggling with low prices. What's particularly interesting is how America's AI dominance connects directly to our energy capacity. Secretary Wright stated bluntly, if you would not have won the election, we would not have won the AI race, full stop. AI data centers consume massive amounts of electricity. The next generation of large language models will require even more. Without abundant, affordable energy, those data centers would be built elsewhere, likely in countries with fewer environmental safeguards. This connection between energy and technological leadership deserves some attention. That nations that can power the AI revolution will lead it. And right now, that's playing into America's advantage. The reshoring of manufacturing that's beginning to take shape here, from chips to steel to automobiles, depends entirely on energy abundance. Secretary Wright emphasized that trillions of dollars in manufacturing investment returning to America would be impossible without our energy resources. Well, this is the untold story of American industrial revival. Energy isn't just another sector, it's the foundation that makes everything else possible. The factories returning to our shores aren't coming because of nostalgia. They're returning because American energy can make the economics work. Eastern European nations find themselves at a critical juncture, caught between the EU's aggressive climate agenda and their own needs for energy security. The U.S. is encouraging these nations to chart their own course rather than following Brussels' timeline. It's not about abandoning clean energy goals, it's about pursuing them on a realistic schedule that doesn't leave those countries vulnerable to Russian pressure. Poland's nuclear deal is just the beginning. Countries like Romania, Bulgaria, and Baltic states are watching closely, weighing their options. The message from Washington is clear. America is ready to be a reliable partner in their energy transition, offering alternatives to both Russian gas and rushed decarbonization. While we're seeing energy renaissance across much of America, California stands as a cautionary tale. The state has slashed drilling permits by an estimated 95% from previous years and is actively shutting down refineries. The result? Gasoline prices that could hit $8 a gallon. This isn't speculation, it's simple supply and demand. When you constrain supply while demand remains steady, prices rise. California's energy policies are creating artificial scarcity, and consumers are paying the price. Eastern European nations are taking note. They've seen how energy shortage can cripple economies and create political instability. They're increasingly skeptical of policies that prioritize ideological goals over practical energy security. One of the most significant developments in the first 100 days has been regulatory relief for energy producers. Secretary Wright noted that operators are finally seeing some breathing room after years of increasing regulatory burden. This isn't about abandoning environmental protection, it's about smart regulation that achieves goals without unnecessary complexity. The administration is focusing on outcomes rather than on process, allowing companies to innovate in how they meet standards rather than prescribing every step. For family-owned operators in places like Texas, this approach makes all the difference. They can focus on producing energy efficiently rather than navigating bureaucratic mazes. The result is domestic production, more jobs, and more energy security. Here's where competition does get real. We're in direct competition with Russia for energy markets, particularly in Europe. Russian pipeline gas still holds a cost advantage at $6 to $8 per million BTU compared to U.S. LNG at $10 to $15 after accounting for liquefaction, shipping, and regasification costs. But cost isn't everything. Reliability, security, and geopolitical considerations matter too. European nations are increasingly willing to pay a premium for energy that doesn't come with Russian strings attached. The Poland nuclear deal demonstrates this shift in thinking. The administration's strategy is clear. Position America as the reliable alternative to Russian energy dominance. It's working, with European nations increasingly looking to Washington rather than Moscow for their energy future. So what's the bottom line here? America's energy sector isn't just surviving, it's becoming the cornerstone of our economic and geopolitical strategy. LNG exports are reshaping global markets, nuclear partnerships are strengthening alliances, and domestic production is keeping prices affordable despite challenges. This isn't happening by accident. It's a result of deliberate policy changes that prioritize energy abundance over artificial constraints. The message from the administration is clear. American energy is open for business. For investors, the implications are significant. Companies positioned along the LNG value chain from production to processing to shipping stand to benefit from the structural shift. The same goes for nuclear technology providers in the broader energy infrastructure sector. For consumers, the outlook is positive. Energy abundance typically translates to lower prices and greater reliability. The days of OPEC dictating American gasoline prices may finally be coming to an end. For America's global standing, energy exports represent a new form of influence, one based on mutual benefit rather than on military might. When countries like Poland choose American energy partnerships, they're also choosing to align with interests like ours. Our energy revolution unfolding right now isn't getting the headlines that it may deserve. That's okay. But make no mistake, it's transforming America's fundamental economic future and global position. Secretary Wright's comments offer a rare glimpse into how the administration views energy not as a standalone sector, but as the foundation for everything from AI dominance to manufacturing revival. The path forward isn't without challenges. We'll need continued investment in infrastructure, smart regulatory approaches, and strategic thinking about how we deploy our energy advantages. But the direction is clear and the potential is enormous. These developments will be tracked closely in the weeks ahead, bringing you insights you won't find in mainstream coverage. The energy sector is transforming, and understanding these critical changes is critical for anyone looking to navigate what comes next. This is Mark Roach with FutureWise Energy, signing off. Stay sharp out there.